Okay, good morning, traders, and welcome to this live intraday strategy webinar. Today is Tuesday, November 16th. Mike Boutros with you on the horn. Good to be with you guys this morning. Marco, Steve, good morning to everyone in the room. It's been an interesting start to the week. We've continued to see some further dollar follow through with a pivot above that 95.15 level. But again, things are seeming still a little stretched. So we want to pick and choose our entries here. On the menu for today, DXY, Euro, Dollar Yen, Gold, Aussie Dollar, Sterling, Dollar Yen, Crude Oil, and Dollar CAD. Any other questions or trade setups, do let me know. I'll take a look at Bitcoin before we wrap up the session for sure. And a quick update, again, I was sorry about the wait, guys. We just were looking for retail sales. They just printed at 1.7% versus the 1.4% forecasted. Bit of a caveat here. The previous read was revised down to up to 0.8%. So overall, retail sales do seem strong. You've been getting that argument for pent-up demand, whether that's going to filter through into the markets or not. And let's just take a quick look. DXY still holding near the highs. SPX should be pretty buoyant on this. Okay, we'll go over those levels deeper in the session. All right, well, let's jump right in. Great to see everyone. So, quick housekeeping, guys. Today's the last webinar for the week. Just some update. Over the next 2 weeks, we're waiting any day for little baby girl to show up, little baby Boutros, and we're moving. So there might be intermittent updates from my end, guys. I'm still going to try to get at least one webinar out for the next couple of weeks, but do bear with us. I'll try to keep you guys updated as always on SB Squawk and MB Forex. So with that out of the way, let's jump right in. DXY looked like this. I gave you guys an update on this yesterday. I really just wanted to highlight this resistance zone that we were testing on the near term front. Here's the longer term charts we've been following in DXY. Again, we've been talking about this 95.15 level into the open of the week. I really want to see how this materialized. That's the first lateral level of resistance after the breakout. You can see we stopped there for a day, but we made a short order. On Friday, that's where we closed. This week, we opened up and just vaulted through. That advance is now extending into its first level of resistance. On the weekly chart, looks like this. And it's this median line for the broader structure we've been following off the yearly lows. Very objective, very effective median line. So again, we come to one more threshold where we're looking for a pivot, right? It's either an exhaustion spike here and you get a decent pullback. Either way, it's constructive above 94.47, or you get the breach, in which case you see one more extended accelerated rally up. The 50% percent retracement of the decline off last year's high, last year's open, downtrend resistance, all up here, 96.10 to 96.50. Momentum's knocking on the door at 70. Okay, so you're already looking at a hair trigger ready to go. We close above 70, we pop above the median line, look for that extended move towards 96. Until we do, the immediate advance again, and by my part, maybe a little exhausted here. If you're holding long dollar exposure, good area to start just cleaning it up a little bit. Here's what the daily chart looks like again now versus yesterday. Still holding that 2019 low day close, the LDC. Uptrend resistance right here. Momentum, not only on the weekly chart at 60, but also on the daily chart, or excuse me, at 69, knocking on the door at 70 on both time frames. Again, very clear trigger, guys, heading right into the open of US trade. We're at resistance, plain and simple. Intraday chart looked like this, okay? Forgive me on the slope, but it's still kind of holding, all right? I really don't like, again, these super acute slopes to the upside, but it seems to be holding. Here's what it looks like from yesterday. The level, we opened up 95.55 into 95.48. That actually ends up being a 1618 off the low. 1, 2, 3 gives that 1618. And I warned you, just higher is that parallel that we were looking at on the daily and the weekly. Okay, risk for exhaustion, risk for near-term pullback. That's all we've been saying, and here we are. Again, The pivot break, if we get it, you're likely going to see an accelerated pop. Remember, a breach of uptrend resistance, oftentimes the sharpest part of the rally. So we're at an inflection range. I'm looking to see, ideal scenario for my part, I think we get a near-term exhaustion, just a pullback, whether it's slope support or whether it's all the way down to the weekly open. Okay, the weekly opening range lows, I don't know, but I'd be looking for an exhaustion low on the pullback ahead of 95. If you're holding longs, an area to tidy up, take a little off the table. If not, go break even or better on the stop. If we get this push, it's likely to be a pretty stiff pop. Oop, my marker. Any questions on DXY? Slightly late. No worries, man. Always good to see you. All right, so listen, we still got a lot of data for the rest of the week. Okay, tomorrow we get UK inflation, core inflation, Eurozone core inflation, and Canada core inflation. All right, so the inflationary story continues. We got those real 30-year highs in US inflation last week. UK, Eurozone, and Canada on tap tomorrow. The following day, Japan inflation. So inflation is still very much at the forefront, at the center of the discussion right now. I've told you guys what I thought about that. I won't go into that in any more detail, but it's really a problem. And if you're a student of economics, you know that prices tend to be very, very sticky. It's easier to try to stoke inflation than it is to try to curb it. So these numbers, that's all to say, these numbers have the propensity, the possibility of really just charging some volatility tomorrow. So keep that in mind as we get into the US session. All of those reads are due right ahead of the US Open. 8:30 is Canada, and that's the last of the few. All right. Okay, so that's DXY. Number two, here's Euro. My last update for you guys on Euro was back here on the 11th, and here's what it looked like. We had just, the previous day was on the 14th. We had just broken, I'm sorry, did I close the window? No, it should be here on the 11th. Oh, here it is. I'm sorry. So we had just broken the lows and we were looking for a pivot. The weekly chart really was highlighting the 2019 open. Here's what it looked like on the weekly chart. And that level was 1445. We talked about that for a while. You had the highs for the opening range of 2020. This was the actual open, again, for 2019. The high week close for 2019, it's all lined up in this zone between the 50% retracement and the 2019 open. Add to that, guys, that the downslope that we were following, the pitchfork off last year's highs and this year's highs, right, was right there. So if this break is legit, it certainly suggests it threatens a much steeper decline. Once again, this is the inverse, guys, of DXY. Remember, 60% of DXY is Euro. Once again, we're having, as DXY is testing 60 on the upside of momentum, here's Euro testing 30 on the downside of momentum. These things are coming into extremes, guys. There's going to be some sort of catalyst, either pivot or accelerated drop even more so. Remember, the break below 30, we haven't seen that in Euro since back here, and this was the resultant price action, right? So it's coming into an area of which everyone better start paying attention pretty quick. That's the weekly chart. Euro looks like this on the daily. I literally don't have anything as far as levels concerned until you get into 113. Here's what the daily looked like back on the 11th. That's the level that we were warning about. If that breaks, 1445 could see things fall apart pretty quick. Boom, it just took a day. Again, if this is a break of downslope support, you would think you'd get an accelerated push. Now, what we were looking for right now is if the Euro recoils, rebounds. If it holds resistance right here at this slope, we're still looking lower. It could just be a break of support, check as resistance and move off. If we pivot back above, it's false break scenario all day long. right? So here's what it looks like on the intraday. And here's what it looks like now. So again, not my favorite setup. I've tried to figure this every which way. There's not much slope that you can delineate to this decline. That's not like a super acute, just vertical, drop. So I haven't really been involved here. If you're holding shorts, you stop at 14.12, 14.13, the 2019 high, right? That June high, and let it ride. If you get the extended move, you're going to get another drop towards 113. It's another good 70 pips. But if you're looking for new exposure, I can't prompt anything on the short side from this end. If you get failure, 2 levels of interest specifically here, because that's right next to the weekly open, 2 levels of which the exhaustion would need to fail to move lower. But it's stretched. It's stretched. Even on this last decline, guys, on the 2-hour chart, you're seeing some divergence. Price action with a lower low, the oscillator with a higher low. Weak signal because it's below 30, but a signal nonetheless. Okay, not my favorite setup. I'm just kind of looking to see what happens here into the US Open. If we get exhaustion into 14.12 or 14.10 even, might be a decent stop against the high. See if you can rejoin that decline. But our initial setup, everything we were looking for last week was for a decline to this region and to look for what happens here. You didn't get much of a bounce. So unfortunately, Euro is still on the shelf here. Any questions on Euro dollar? Core inflation on tap tomorrow might be the thing that stirs things up. 5 a.m. here in New York. Expecting a tick of 2.1%. That's up from 1.9%. Obviously, this is the final read for October, so it's probably not going to be the bigger market mover. I'd be looking more for the inflation reads from the UK and Canada. All right, next up here is dollar Swiss, number 3. So Swissy actually was the cleaner of the two. We saw that topside breach. Let's start off from the weekly chart here, kind of walk you through how this one played out. Swissy last night looked like this. We were just heading into resistance. So if you go to the previous update, again, which is always provided for you guys, here's what the Swiss dollar looked like as we were just tempting support, right? Here's the daily chart, or it's the weekly chart, excuse me. Here's the weekly chart now. That key region of support, 618, 90.80, the 52-week moving average, that held, okay? Beautiful hold, beautiful recovery. Now you're coming into resistance again. You got to drop that down a little bit lower. Here's the high week close from September, converging on downslope resistance. And what a downslope it is, guys. 2 touch, 3 touch, 4th touch, right? Converges on the high week close right here. That's 93 flat, 93 proper. Okay, so that's the weekly chart. Shows that, all right, maybe you get a little more upside. No problem. Daily chart looks like this. Very similar stance. First thing I was looking for was that 618 retracement at 92.60. That broke. Again, here's what the update from last night. The 2018 low week close. It's not highlighted here, but it was right around that same region. Still broke, pulling back. Watch today's close. Watch today's close. Here's what it looks like on the intraday chart, 2-hour. And here's what it looked like last night. Okay, I might have reformatted this just this morning on this drive, trying to see if I can get something. I was playing around with this just this morning. But look, here was the initial slope, excuse me. Here was the initial slope that we were working with. And you saw that break. Here's the first major lateral level. Again, that's 618, the 2018 low week close. Popped through, pulled back. This could still hold, but this needs to hold the lows right now. If we open up in the US trade session and you start to dribble back below that 618, quintessential false break. Okay, I was trying to give this some slope, was what you saw earlier when I got to the page here, but nothing has really been jiving. Even if we tweak it to basic trendline support from here, just these 2 touch, it's not the cleanest. So I'm going to work with our initial slope here. Remember, a breach of uptrend resistance should be the sharpest part. So if this is a pullback, this would need to hold. You're looking for 93. If we buckle back below that, again, the dollar exhaustion trade starts to come to focus. A topside, blow off here. You could see a pullback towards the weekly open. That's really where I'll keep this constructive above the weekly open. Remember, again, this came major breakout, right? Not only was this a major breakout, guys, but this was an objective breach of the monthly opening range. Keeps your focus looking for a late month high. Questions on dollar Swiss? Okay, that was number 3. Number 4, Eman, I know you love this one. Here's gold. Is this a topside break? So I showed you guys yesterday, this thing was coiling. And I do think you're going to get, like I said yesterday, more of a accelerated pop here if we breach. Look, this is what the weekly chart looked like. Our line in the sand was 1825 and 1850. We broke through both of those last week and closed a weekly close above. That's all to say, you're constructive, you're bullish above 1825. Your next major lateral level of resistance is 1903, 1923. It's a big $20 zone, but you can see here, obviously, no closes above this zone for the year. So that's key resistance. Now, this is the weekly chart, skydiving from 1,000 feet up, right? If we zoom in, here's the daily, looks a little stretched, okay? Yesterday actually was the first down day in like, I don't know, 6 or 7, but it wasn't much. And here's the push. Looking a little tired, but a couple things I want to highlight here. We're in overbought condition. That means the propensity of the market to move higher. All right, you're seeing it here. Remember this? If people start saying, oh my goodness, we're in overbought condition, I got to start fading this, would have been a couple of tough, rough days, right? It was the break below 70 that finally accommodated at least a shift in momentum. Now, this is obviously a trigger, a cherry picked trigger because it was a big drop, but you get the picture. So we could be a steady climb higher. I don't know. What I do know is that I don't want pullbacks to get any deeper than 1865 intraday if we're moving higher. Note that despite the last 4 days, guys, we still haven't gotten a close above 1865. And that's my concern. Like if we yesterday had popped and closed above there, even that would give it a little bit more credence, but we still have yet to mark a daily close above. Risk for near-term exhaustion, sure, still constructive above 1825. Now on the top side, the objective yearly open is 1898. Key resistance, again, that 1922 into 1918 level. It's the breakup of the zone that you see right here. Intraday looks like this. So I've had to adjust this channel a couple of different times, obviously, and it's getting pretty tight. But long and short of it is, this is that channel. This is the trend we've been following, right? So even that we broke 1865, we're still holding that. If we close below 1865, that would be the exhaustion trade. If we push above this trend line, you're looking for you're looking for 19. The yearly opens at 19, 1899 too. So it's a real tight trade, and it could go either way. You're basically looking for a break of this exquisitely tight range. I know it seems too clean, but that's just basically what I'm looking at today. Now, if the dollar pullback gives a little more, you would expect the top side to give out here, right? Could be the fuel, the tailwind that this needs. Inflation concerns, yeah, sure, all right, that's on tap tomorrow. Maybe that's the fuel. But gold has made it's made a major breakout. You can't deny it. Even if you take this slope here, I know some people are like, well, what if you look at the yearly trend, Mike? That basically puts us at resistance. Fine. Even if you're looking at that slope, today's close, if it were to materialize here, still would merit the extension. If we pull back, that's the problem. That's the problem. So look for some definitive price action in gold over the next, I don't know, few hours into the head of the US trade session. Don't get too aggressive on this. So even if it breaks 1865, treat it with respect. It's only Tuesday. And if it were to pull back, an objective break of the weekly opening range, that's 1856, excuse me, $10 lower, that would be a little bit more of a all right, you got the blow off. You broke below the weekly opening range lows. That's an inherent, near-term downside bias. But we're at resistance. We're at resistance. So gold, I have my eye on this like a hawk, Questions? All right, Aussie dollar. So we came into the week saying, look for a rebound in Aussie, right? We've been coming off a pretty big support. It made a really nice drop. Let's see if we can't get a little bit of a pop to offer a fade. We're getting the pop. It's not much yet, but here's the weekly chart. I showed you guys this yesterday on Daily FX. I don't want to walk through the whole process again, but it was a very, very clean reversal, right? That was a beautiful resistance level we turned from. This is objective Fibonacci support. 618 of the advance and downtrend support, right? Bounce. That's all we were looking for. And we got it. A little bit of a bounce. Now, 73.85 near-term resistance on the weekly charts. Weekly. Heading into the daily, here's what it looks like. And here's what it looked like back on the 14th. The focus was that 618. And if we got a rebound off that 618, and we did get a rebound off that 618 from 73.30s is where we closed that level. We popped as high as 73.70s before kind of exhausting. Minor setback. Still came off of big resistance. Is the oomph over? Is the dollar going to resume, or do we still have a little bit more upside to go in Aussie, downside in the dollar? Here's what the scalp looked like. So from this standpoint, we were coming off of downtrend support. Sure, look for recovery. Inherently, you're looking for resistance either ahead of the 75% parallel, ideally ahead of that 38.2, which was coming in right at 73.85 again. Here's what it looks like now. Beautiful bounce. Not much follow through, but here's the weekly open. Didn't quite get into slope, didn't quite get into the 38.2, which is kind of why for me, I would have faded this, and kind of obviously hindsight's 50-50 is 2020, but I still think, guys, at the end of the day, here's your weekly open. All you've done is set your weekly opening range right above the median line, excuse me. Okay, so it's either a break below 73.20 for the resumptive move, or it's a rally to give us a little bit more of a higher thrust towards the downslope, and I'd look to short exhaustion high there. At the end of the day, it's a weekly opening range is set. We'll respect that move. The bearish invalidation for this trade is still 74.13, guys. Okay, just a really big pivot in price. That's what really would be needed to kind of mark resumption of the or reversal rather for the uptrend in Aussie. From my part, I'm still looking to fade a bounce. That might have been it. I might have missed it, but the weekly opening range is intact. Even if this gets closer and fails again, you still got another opportunity to fade it. I still think you might get that one last thrust towards slope resistance. Questions on Aussie? There's no Aussie data of merit, at least for this week. All right, so that is number 5. Questions. Number 6, here is sterling. So British pound also made, so no change to any of these levels from Aussie. British pound also made a very similar stance. Remember, we came into the week looking to fade a bounce. It was the same trade. Same trade. I thought Aussie was a little cleaner because we were coming off of the actual lower parallel. This was coming off of sort of the 25% median line there. But we're looking to fade strength while below the objective 2018 open. That was like 35. Here's what sterling looks like now. We got the turn, we got the bounce. Here's the extension. Daily chart doesn't have much to be desired. By the way, weekly chart doesn't really have much to be desired, right? You're basically tempting a fade like this into the lower parallel. Could we get a little bit higher? Sure. We talked about 35, 34.94 is a 2017 high week close. Major pivot in price. So not surprised to see this bounce here, but we're looking to see how much thrust this bounce has. Ideally, again, failure ahead of the median line, ahead of 35, if it's going to hold. Depends how deep the dollar blow off gets. Here's the intraday chart. And here's what it looked like early in the week, right before the Sunday open. That's the level we're looking for a high ahead of. Here it is. So if you saw this on Sunday and you said, you know what, I'm going to give it a long, we're coming off the lows, some really nice moves and momentum, and you're holding this, that's cool, but don't get too aggressive on it. As you get into 35, 34.90s, look to see if this thing blows off, because that's downtrend resistance. That's a major lateral move or lateral level of inflection in price. Now, even if you zoom this out even further, I don't want to confuse anyone, but there is the 25% parallel that we're looking at the daily chart. Look where it lands. It's right there. So any way you slice it, looking for something around 135 if we get a push higher. Okay, downside break of the weekly opening range lows has you looking for 133.40s. That's basically near the lows that we made for the month. There's a confluence region there. The 100 comes in at 33. That would take some pretty strong dollar move to do that. So keep an eye on that. Again, UK core inflation. This is a final read for October still. Is expected to revise from 2.9 to 3.1. Year on year is expected at 3.9 from the UK. So globally, the inflation story takes root. All right, that is number 6. Number 7, here is the abomination. Here's what dollar yen looks like as we head into Tuesday. Don't forget, you do have inflation data on not tomorrow, the day after. I guess that's Thursday. I'll be out on Thursday and Friday this week, guys. But we are expecting inflation out of Japan. They don't give us a time, so it's just a date, right? That's always how they do it. Here's what we've been looking at. Forget this. Let's just look at the daily chart for a moment. And here's what it looked like in our last update. So heading into Sunday, the focus was, look, the weekly chart is super clean. Super clean, right? Here's the pitchfork. On the weekly chart, we ran into major resistance. We were talking about this for months. That's 2018 high, 786 retracement off the high from late 2016. The median line, right? We ran right in there. Ever since, we've been sort of in this stall mode. Last week, bottomed out right at the 25% parallel. And here's the thrust. Key resistance is still there into 1492, 1455. So I don't, it is a near-term breakout, right? But if you're holding the longs, you still have to be really concerned about this zone. And that's kind of the focus as we head into this week. Daily chart or the weekly is still tempting another break above momentum. Again, above 70. Here's the last break. Here's the previous break before that, right? Real high stretches. So watch this week's close. Key resistance, 1455, 1492. Here's what it looks like on the daily chart. If this is a bull flag break, okay, which a lot of people are calling, you still have to deal with that key resistance. 1755, 1790, 1495, 1455, geez, into 1492 is this resistance region right here. Just higher is this 618 at 115.16. And that dates back to the high that we made back in 2015. A little bit different. So big levels on the upside for dollar yen. Big levels of on the upside for dollar yen. We really need to see a push through this. Inherently, a break above this would have you thinking, okay, that's a breach of the median line, of the opening range highs for the month, of last month's highs, fresh yearly highs. You're looking for an accelerated pop. I'm with you. But 1415 is just dangling there, only 50 pips higher. The abomination is going to do abominatory things. Here's what it looks like on what we were following. This slope is null and void. We've ripped higher, so we're going to go ahead and scratch that. There's not much to the advance as far as slope is concerned. You could, I was looking at this, it's not the cleanest thing, but I just want to show it to you. Could be calling this advance just off the lows here from October and this last low we just made. You're getting some play around the median line, but it's not the cleanest. But what I wanted to highlight is this 75% parallel is still in the same range of resistance all the way up into 1492. So watch the advance. Possible topside exhaustion into that zone. Questions on dollar yen. Japanese inflation on tap Thursday. The retracement, I just want to note this, this is going to be variable obviously on the high. I don't like just tagging the retracement, the new high that you just made and just crawling over. So get the new retracement once you see an inflection zone. This is your weekly opening range low right here. All right. That's dollar yen. Next up, let's just hit crude real quick. Number 8. Here's oil on this move. So remember what we talked about last week. Objectively, this thing is still holding its monthly opening range right below uptrend resistance. So we talked about oil on the weekly charts, how this is such a major resistance zone. This is the 2013 low, 85.61, almost to the dollar, turned just ahead of it. Uptrend resistance. Here's the pullback. What is this? What is this? Is this a rebound of the 75% parallel and you're moving right on? Could be. On a closed basis, we're holding, right? It could be something like this where you get a little bounce. Or is there a larger correction at hand? And if that's the case, then 1, 2, 3, third wave correction possibly on the cards, guys. So wouldn't be too surprised to see a little bit of a pullback, you know what I mean, in in oil. But at the end of the day, we have to be disciplined. And this is a very clean monthly opening range. You're sitting right slap in the middle of that range, so it's not really primed for an operative move right now from a trading standpoint. From just a market movement standpoint, if we close and break lower today, this could plummet pretty quick. Okay, this could plummet pretty quick. So that's the daily chart. Mind the monthly opening range. Momentum, slap at 50. Nothing, right? So don't make any assumptions here. I see a lot of calls. I try not to, but there's a lot of noise on Twitter and people tweet at me all the time. So I try to filter out that and just stay disciplined to price. Here's what it looks like on the intraday price action. I think this was in the last update for crude. Yeah, same range, same slope. Here's what it looked like on Sunday. Key support 79.80 into 80.02. Look at this thing. Little break, test that median line, just lower, and then we pop through. Here's the 38.2 retracement as resistance. We came into the week saying, look for exhaustion either here or here on a bigger recovery. And that's still the game plan. That's still the game plan. If we break lower, you're looking at 78.24. You're looking at 76.87, the 2018 high, 38.2 retracement. This is sort of where I'd like to see a little bit more of a basing. Might be actually an opportunity to get back on the long side. It's either a drop into here to get back long or a break above this key zone to resume the uptrend. But we're not out of the woods for oil. Dollar strength would help the cause to try to get this thing to an extended low to just get one more corrective move, but still could happen. Still could happen. Any questions on crude? Overall, guys, it's still a bullish trade. The whole point that we talked about last week is the break of this channel, test of it as resistance, usually can lead to another low first. But we'll see how that plays out. Questions on oil? That's number 8. All right, well, since we're talking about oil, here is dollar CAD number 9, and the last of the FX block that I've been sort of tracking with you guys. Here's what dollar CAD looked like in our last update back on the 11th. It had just broken up, or just broken out rather, of the uptrend that we were following on the near-term chart, taking out 2 of our targets. Our last level was the 50% retracement. I think it was like 126 and change. And here it is, right? We actually never got that high. This is the daily chart. It turned right ahead of it. That actually was the high. So let me take a step back real quick. Here's what dollar CAD looks like on the weekly charts. All right, there's a lot here. So what can I get rid of? 2016 low, still pretty important, but it's kind of noise right now. So let me just do this for a sec, okay? So here's the rebound, the nature of the rebound. Again, that slope that we were following, the 2018 low close was right there. We dropped into it, spent 2 weeks testing it. Here's the rebound. Now this week and last week, you've been testing the 52-week moving average, a 38.2 of the objective drop, and the median line for the broader formation we've been following from 2017. Look at that slice. Breakthrough, resistance, resistance. Sailed through on both ends, but not much price sits there, right? It's a very low tolerance slope. So when price gets there, it either wants to inflect higher or pull back, but it doesn't want to like sit there and play. You don't get any of this kind of nonsense on a major inflection zone like this. So we stretched as high as 126 last week and we pulled back. What is this from here? Well, if you're looking at this objectively from a weekly chart, you'd say, well, it's probably in for a little bit of a pullback. This is a major inflection. Wouldn't be too surprised. But if we break above it, there's really nothing till 26.95. And that's where I think the risk lies, is that here's the daily chart. It just got super sloppy. A breakout of this uptrend should have found support there, but we didn't. We got deeper. So I don't want to work with this slope. It's kind of just noise at this point. Came into last September's low and rebounded. Is this just boom, boom, and then resumption? Some nice symmetry to the lows there. Could be. Here's what the intraday chart looks like. And here's that same slope from last week. I just wanted to leave it on here to show you how this played out. Here's the September low, right? We want to see support ahead of this zone. That's bullish inval. Well, didn't work. That broke right into the start of the week, but bullish inval held. And here's the rebound. All things held constant. Here's your weekly opening range high. If we break 125.50, it's an objective topside bias based on price action, okay? Not my opinion, not the market headlines or anything. Study of price. Here's your weekly open, test a high, pull back. If we break that high, you're looking for resumption, 25.90 and 26.18 on the long side. If that does materialize, go ahead and drop that slope. I've been trying to work this slope to try to get something that makes a little more sense with what we're seeing in price action. Any way you slice it, it's messy. So the original slope that we were working with, which gave us the breakout, here's the 25% median line right here. All things held constant, guys, just look for a break of the weekly opening range for guidance. It's messy. It's messy. Bias is up. Could still get a pullback, but the bias is up. Long term or the medium term. That was a breakout at the beginning of the month. Major breakout. Any questions on Looney? All right. Everything on the other side turns out to be pretty decent. Here's the look. I just want to show you a couple levels on not only Bitcoin, but also what was the other thing I wanted to cover? I didn't jot it down. If I said it earlier, someone in the room remind me. But here's Bitcoin. Listen, it's a pretty big move. It's a pretty big move. And everyone on TV is, oh man, is the Bitcoin rally reversing? Well, it's very simple that it just could possibly be pulling back from Resistance? Say that to someone who's on the deep in the crypto play, and they look at you like you're crazy, right? Resistance? What do you mean? Well, it's right here. All right, the record high was 64,895. We had the 618 extension of the advance. That was 66,325. You got a couple of daily closes above it, but a pretty mean outside candle to the downside. And then here was another outside daily reversal that we made yesterday, right? The candle takes out the previous day's highs, tested resistance again at 66,325, closed lower on the session, covering the entire previous Friday range. All right, these pullbacks based on the parallel and the analog to 2018 price that we've been following would suggest that these pullbacks are likely to be shallow. Okay, if you just measured this pullback here, that was like 16% in pink. So from here to the downside, we're about 15 now. You know what I mean? Looking for a recovery, basically looking for some basing. Now, this could be, and I want to just take you to the intraday chart. This is the lowest momentum read that we've gotten since like October. Okay, so if we look at the intraday chart, it does show a little bit more of a different picture. If you guys remember, we were following this interior slope. And even when we pivoted below was resistance, broke back above was support. We kept on going merry way. Support, failure ahead of the 25% parallel. And then what's this? A break of that slope, resistance, resistance. Here's the kickback. At the end of the day, we can essentially call this zone a major just range for Bitcoin. And we came off the bottom end of that range just now. I don't want to be calling the low, but basically it's here or here if Bitcoin's going to hold higher on this stretch. Anything beyond 56,280 and you're in big trouble. That's just an objective break of the monthly opening range low. It's not even my opinion. It's basic price action. So one other level to consider, and I was looking at this morning too, but it kind of muddies up the chart. So I want to just show it to you in real time. Here's the 100% extension. So even if this is corrective, 1, 2, 3, that's kind of where you would want the low to materialize. You know what I mean? And you're seeing this on some of the other coins as well. Here's Ethereum, right? Break of uptrend support. Take a quick, again, this is real near-term price action. There's the 1, there's the 2, there's the 3. A little bit deeper there. Just want to see where the 618 comes in. Huh. Oh, it did. Snap those levels. Yes, almost. Yep. 1, 2, 3. So 1618, 4,098. The point is that the immediate stretch on a lot of these seems a little there already, right? So we don't want to. Here's a quick look at Litecoin. It's just on CNBC. Becky Quick was talking about it this morning. All fib ratios received, right? You know, this is not like coincidence. Not quite here. XRP is its own animal though. This thing kind of got banned from a lot of places. So, but you get the picture, right? So don't be all on the headlines just yet. This is actually where you'd expect the headlines to start saying, "Oh my goodness!" and everyone starts to raise their hands. You get the people, you get the pictures on the news headlines with traders holding their chins, looking at the screen. Right? This extreme in sentiment on a drop. Usually, that's when the drop is actually terminating. So watch for those things today. As you see people start to talk about, "Oh my goodness, this 15 drop in Bitcoin, we might be at support right here." All right. Questions on Bitcoin or any of the altcoins at this point? Okay, well, guys, if there are no other questions, I'll go ahead and wrap it up here. A quick look at the SPX as we open up the US markets in just 15 minutes here, guys. I just want to show you the same slope that we've been tracking here on the daily charts for quite some time. That's support. It's still a slope that we're looking for a possible inflection. If we inflect below, we could have a little bit more of a corrective stance on our hand. Key support at the monthly open, that still gets you 46.09. Okay. on the upside. Again, this is all slope from here. Things look a little bit teetery. And here's yields. Last thing I'll go over. 10-year yield. We've been following this one like a hawk. I haven't updated the levels, in all honesty, guys, for literally like 2 weeks. And it's just been bum, 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 bum. Oh, perfect inflection down there. Rally, breakthrough, perfect support again. We're at resistance. We're at resistance. Look for something here today. All right. No webinar Thursday and next Monday on Daily FX, right, Michael? Yeah, man. I'm off Daily FX, guys, for the rest of the year from tomorrow. I will obviously be here with you guys. I might not get 2 webinars a week, but I'll try to get at least one, and I'll try to keep the intraday market page updated as often as I can. Jamie will still be here, full tact on that side. So. Says perfect, enjoy. Thanks, man. Yeah, baby on the way, house on the way, lots going down. So, guys, I will be in touch again. We'll be back here on Tuesday, God willing, to go over the aftermath of what's going on here into the close of the week. Keep in mind, the inflation data tomorrow is likely to be sort of the needle in the not the needle, the fly in the ointment, okay? Because there's been a lot of inflation talk on both sides. So keep your eye on that. Watch for this dollar rally to possibly exhaust near term. Oh my goodness. As we open up the US session, looks like we're trying to break uptrend resistance. Euro on the extended move. Yeah, here's the dollar breakout. 96.10, guys. 96.10. Aussie testing a break of the weekly opening range lows. Yep. Here it goes. All right, I'm going to run, guys. Best of luck trading. I will see you guys all next week on Tuesday here. Thank you so much, Marco, Natalie, Steve, Aurelia, and Amanda. Try to get everyone in the room. Best of luck trading, and I'll see you guys next week. Cheers.